The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 5th, marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better Money Master and to provide you with tools that empower human potential. Because living up to our potential, that is something we must master each and every day. So let's begin with a few empowering beliefs. The first one by Napoleon Hill. He says, don't wait. The time will never be just right out there. That's a beauty. How about this one by one of my favorites, Tony Robbins? He says, if you do what you've always done, you'll get what you've always gotten. How true is that? How about one of Tony's teachers out there, Jim Rohn? Let's finish it off with this one. Either you run the day or the day runs you. I hope you're running your day out there. Success, folks, it always leaves clues. That's why I want you to be able to understand candlestick patterns. I want you to understand just different leading indicator patterns, A to B equals CD, butterflies, expansions, the whole gamut. It's why I want you to understand those tools so that you can read the message of the markets. Let's go read the message of the markets right here, right now. We've got the Dow is, I lost my screen. Here we go. We've got the Dow off 48 points, trade down at 15,609. S&P off 3. NASDAQ down a couple points. Russell 2000 just turned green out here. NASDAQ off 3 points. New York Stock Exchange down 28. The Philadelphia Gold and Silver Index up 1% this morning. That's up $1. The Transportation Index off 21 points. Our calling number is 877-927-6648. If you give me a call, we can take a look at your stock chart. Most certainly, we can dissect and bisect. Let's go do that to the markets here right now. Let's start off by taking a look at the S&P 500. It's off about 3 points. Not a big deal out here. If we do take a look at what the S&P 500 is trying to do, it's trying to make its next move. We'll take it to 1720-ish and change. That'll be a 1.272 expansion of the May 22nd swing point high. That was at 1687.18, all the way down to the June 24th low at 1560.33. 1720, if you go ahead and you take those two swing points, take the difference. Take that difference, multiply times 1.272, add it to the bottom of that June 24th area, which was 1560. That's what will take you to 1720. That's what I mean by an expansion of swing points out there. The S&P is above the May 22nd high, so its next level that it wants to travel to is right around the 1720. Could travel higher than that. We can see that price is moving up into or close to that overbought condition, which means eventually it's going to have to be worked off, which could be by traveling sideways to pulling back slightly. I think that it first wants to get into that 1720 level before it decides what it wants to do out here. Now, candlesticks are really a very cool thing out here. What I did notice that I just simply had overlooked here was that what we saw here on the trading session on Thursday was a continuation pattern. You know, most candlesticks are reversal patterns out there. They're either reversal agnostic or they are continuation. There's really not that much in the way of continuation patterns, but there's one called the rising three as well as the falling three pattern out there. If we take a look at the rising three, take a look at this bar right here, this red bar from July 24th out there. Notice how you see the body of a candle, folks. The body of a candle is truly the essence of price out here. Take a look at how we saw 1, 2, 3, 4, 5 small, relatively small bodied candles. Forget about the wicks. The wicks are really just telling you the extreme emotions of the market out here. But if you take a look at these bodies traveling with inside this candle right here, and then what we got was we got a close above it. That's a momentum candle. That is a continuation continuation candle that we saw here. So that itself says to me that what we ought to see is today, tomorrow, some point in time, where the S&P makes its way up to the 1720 level. And so long as price does not close back below that May 22nd high out there at 1687.18, that will at least be the next move out there. I say at least because that's not where it has to stop, but it is likely the next resting place inside the S&P 500. What does that mean for the SPY? Well, if we go take a look at the SPY, it's really going to be this similar pattern. 169.07 is the number inside the SPY, which is the May 22nd high. Your expansion from that level, which is 169.07, down to the low of 155.73 on June 24th. Well, the 1.272 expansion of that'll take you to 172.71. Right now, you're trading out at 170.70. So it's got another 2 full points to make its way up to that level, and I suspect that is what it wants to do. Let's go check in on the Qs here. The Qs were very close to completing A to B equals CD up pattern. That pattern coming off of the low from April 18th, 66.88. That was your A point. Your B point was at 74.95, May 22nd. Swing point high. Your C point was the June 24th low. That was at 69.15. 1-to-1. A to B equals CD. $77.22. Right now, it's trading out at 76.96. Is that where it has to stop? No, it doesn't. But if we do take a look at the expansion, same expansion here of the May 22nd high to the June 24th low, you can see that price is above the point, the 1.272 expansion. So that sets up the real range here for the Qs is more likely 77.25 to 78.53, the 1.618 expansion. And we'll see if either of those will stop. But the Qs clearly in the overbought territory out here, clearly in overbought territory. Let's go take a look at the NDX 100. We'll take a look at that stock chart as well. Give me a moment here. We'll take a look at the NDX. The NDX right here is very close to completing really the same pattern. 31.47 is the 1-to-1 A to B equals CD. Let's go ahead and put that expansion in here so you know what the range is that you're looking for, that you're watching for, and that would be 31.47 all the way up to 31.94, which would be your 1.618 expansion of your May 22nd swing point to your June 24th low out there. Let's go check out the Dow. Let's go see what 30 stocks are doing in the marketplace as we speak right now. You've got the Dow trading at 15,619. If you listened in on the earlier show, we were taking a look at the EKG of the Dow, the 30-minute chart of the futures contract. We saw price had moved down into the oversold territory as it was moving into a resistance channel line out there, and that should have stopped price in its place, and we'll see if, in fact, that's how it responds. Because, you see, the Dow also wants to make that 1.272 expansion. 15,777. Boeing 777 is the number where it wants to get to. So long as price stays above 15,542.40, that is the pattern that should complete inside the Dow. That's at least the minimum price move that we should see inside the Dow. If we go take a look at the diamonds, let's go see what the diamonds are doing. Then that leaves us with the Russell 2000. So we'll leave off by taking a look at the Russell. But if we take a look at the diamonds here are also trying to make an expansion pattern, which would take price into 157.87. The number where it's at right now is 155.86. The May 22nd swing point high there is 155.14. And so long as price stays above that area, then price can move higher. Why do we use that May 22nd level as such a key? Well, because if you get back inside the lower part of the range out there, and knowing that we've got volume down at the June 24th level inside the Dow, it sticks out like a sore thumb out here. There were 14 million shares done down there on the gap down day from June 20th. There were also 14 million shares out there. So that says you got a high volume low down on June 24th. That's why you need to be very cognizant of that area. At the same point in time, that May 22nd level, which was taken out with lighter volume, that becomes a support area. That's got 13 million shares up there. That's at 155.14. Now, let's switch over and let's go take a look at the Russell 2000. We'll do that by starting off with the IWM. The IWM right here, just slightly above the 1-to-1 A to B equals CD. That's at 105.08. If it decides to start moving higher, 108.13 is the next area on its move. That would be your 1 to 1.272. A to B equals CD. We can see right now it's threatening to take out that 1.618 butterfly sell pattern out here. hasn't been a whole lot of movement to the downside inside the strongest index in the market at the moment. Let's go take a look at the actual Russell index itself, see what it is doing out here, what chart patterns I've got. Really the same thing, and that is it's already well above the 1-to-1 A to B equals CD at 1052, and what that really says is this thing may want to get all the way up to 1083 out there, and at 1083, the Russell 2000 ought to run into a price channel that takes you all the way back, the price channel high that takes you all the way back from the 2009 lows. Those are the red diagonal lines going across my screen out there. So that is inside the Russell. Now, if I take you back in time, which means go back, take a look at that 30-minute chart, that EKG chart on the Dow. We'll start off with the Dow because we were also looking at the hammer candle inside the ES Mini. You can take a look at this rising price channel. This is just a shorter-term one, but still nonetheless a rising price channel off of July 26th. And what we saw the Dow do is come down, tag that area, close back above the rising price channel. Right now it's trying to complete a bullish engulfing candle. Of course, it needs another 13 minutes before that will occur. We can see here, utilizing the relative strength, relative weakness indicator, it needed to bounce or move sideways in order to work off that oversold condition. Now what we're seeing here is a bounce out there. And we know by taking a look at the diamonds, by taking a look at the Dow, it actually wants higher price to go complete its patterns out there. Inside the ES Mini, that 30-minute chart, it did complete that hammer candle as well as a bullish engulfing candle session here coming into that 10 o'clock close. Right now it's taking on the open of Sunday evening session, which was at 1701 and a quarter. It's at it was at 1702.75. It is at 1702.75 as we speak here right now. Let's go check in on the commodity sector. Let's go see what's going on with Goldilocks out here. You've got gold right now traveling out at 1305.90. Not a lot of movement. Gold has behaved very, very well, meaning if we take a look at the rise in the U.S. dollar index versus the lack of decline inside gold, very, very strong. Gold has made only a 0.382 retracement. That 0.382 retracement is measured by coming off of the June 28th low, 1179.40, all the way up to the high that was put in on July 23rd at 1348.70. 1284 was the exact 0.382 retracement. It got down to 1282.40 on Friday out there. That says if that is all that gold has to the downside, you will see a price move to 1497 to 1555 as its next run topside inside gold. Once gold gets above 1330.70, as we speak right now, if we see it close above 1330.70, gold will be off to the races. And here's the beautiful thing. If you are a believer in gold, the short covering rally has not begun at all. Those non-reportable group inside the CFTC, COT data, they are still sitting at the largest net short position historically for that group of traders out there. You will see the sphincter muscles tighten up on that group at some point in time, and then you'll see gold rise by a good $100 or so, 100, maybe even more, when you see that short covering rally unfold. We have not seen that inside gold. If we take a look at the silver here right now, you've got silver trading back just a tad, but look at those small-bodied candles. The bears can't exactly say they've got control of silver out here. In fact, all it's doing is just traveling with inside that wide-ranging bar from July 22nd. Right now, we've got the Dow off 35 points. S&P is down 2.5. Be right back, folks.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow's off 37 points right now. S&P off a couple, composite down 3, and a request to go take a look at NUGT. Good old nugget out there. That's the Direction Daily Gold Miners 300% position. If we take a look at it right now, it is priced out at 642 out here. I like the setup on this. The change in trend appears to be underway. We'll get a confirmation of that if we see a close above Friday's candle out there. That high is 696. If you're not in the trade, I would say be patient and wait for a close above 696. You get a close above 696, it becomes a very nice momentum play, and very likely the C point of the A to B equals CD will have formed. If that is the case, that A to B equals CD that you're looking at inside nugget will take you up to the 1025 mark. If we take a look at the retracement, that's your 1-to-1 A to B equals CD. You'll see that it's done a 0.618 retracement, or close enough to it. 609 would be the exact number. The price that we saw on Friday was 620 out there, so even if it goes a bit lower, that's still okay. But I don't think the trade, the way I would trade this, I wouldn't trade until you got a confirmation out there. You get a close above 696 out there, that becomes a pretty nice trade. You know, you're looking, your risk is probably about $1. Below the close, meaning somewhere below the 620, somewhere below that C point out there, with your reward being, up to 10 $10, more likely even $11.35 out there. That is on the that's on the NUGT. The trade setup is really the same on the GDX out there. So looks like a pretty nice looking trade setup, but I want to see it confirm itself, and that means a close in the case of Nugget above 1696. Not a test, a close above 690. Did I say 696 out there? That was on NUGT. Let's go back over into the commodities right here by taking a look at light sweet crude. That was backing off a little bit here this morning. We had light sweet crude right now traveling out at 106.30. That's off just about 0.6% here, down 64 cents. Not a big deal, you know. What light sweet crude has here has got this wide-ranging bar that we saw on Thursday. Price right now just traveling with inside that. Should light sweet crude close above 108.06, that's what sets up the move to 114. That'll be your continuation pattern, so long as it occurs within the next few trading sessions, and so long as we don't see it close below 105.10 out there. And that is on the light sweet crude. I suspect it really wants to go ahead and it wants to tag that 114-ish area and go ahead and complete that 14-point move inside when it had broken that consolidation trading range that it had been traveling in for a full year's time. If we go take a look at bonds, see what bonds are doing out here. You know, they had a nice little bounce out here on Friday, but again, bonds, I could see getting long bonds here. When I say here, with a close above the number of 134.07. Now, it becomes a fairly risky trade because you're still inside the body of the candle session from July 15th. That's all. Since July 15th, bonds have done nothing more than just simply move sideways. But I can see, for those of you that wanted to take a trade, let's say via the TLT or something along those lines, if bonds did close above 134.07, then you could go ahead and take a short. I wouldn't exactly back up the truck, but I could see a bond that giving you a confirmation signal that bonds were ready to maybe make a bigger bounce, maybe a dead cat bounce up into the 138.25 level. I think there's better trade. No, I should state this otherwise. I know there's a better trades out there than that one, but for those that like to trade bonds, that's what I would be looking at. If we take a look at natural gas out here, let's look at the continuous contract. It's trying to bounce. It has had a tough go of it. It has not been able to hold even the 0.786 retracement level. So this has failed at the 0.618 Gartley buy. It's failed at the 0.786 Gartley buy, and right now it's headed down to the lows. It's headed down. When I say the lows, I'm really referring to the swing point low session of February 15th out there, somewhere around the 312 to 319 range. It's at 335 right now, but we have not seen any bulls step into this equity, not since this candle session right here from July 18th. So we're talking about a good couple of weeks before any bulls have even been seen inside of natural gas. That includes today. Just because the candle is green does not mean that it is a bullish candle. In fact, that's a bearish candle that I'm looking at right now on the screen, and that is on natural gas. No guarantee that it's going to stop there at those swing point lows of February of 2013 or really January 2nd, that low out there of 305, but that is where natural gas is headed to at the moment. Let's go. When we come back, I don't know what we're going to do, but I'll figure something out for us. Or you can give us a call at 877-927-6648. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Had a request to take a look at Intel. INTC is the ticker symbol, so let's go take a look at that stock chart. This is a tale between the bulls and the bears out here. If we take a look at the bullish side of Intel, all we're going to see here right now really is we're going to see a couple of things. We're going to see this hammer candle. This hammer candle was formed on July 10th, so real critical price point for Intel is the low of 2264. You get a close below 2264 on Intel, that says that price ought to come all the way back down to the April 5th, 2013 low, somewhere around 2075 right now. Maybe they stop right around 2136. There's a set of swing points at April 15th, but that would be your range inside Intel. There was a little bullish engulfing candle as well here on July 25th, but really the bears here inside Intel are camping out more so than the bulls. Let me just clean up the chart out here. Let me just do that. for a moment. And as we take a look at Intel, so you got that hammer candle right here again, July 10th. But what we can see here is up at the top, as Intel was making a high on June 4th, it did that with a little shooting star. Now, that is the exact opposite of this hammer candle right here. So where you've got the hammer candle is bullish, you've got the shooting star, which is bearish. Now, what happened with Price is Price tried to attack that shooting star out here on June the 18th, and it was thwarted with a bearish engulfing candle. So you got the bears truly defending the upper portion of this in that 25, 50, 80-ish range. And then you had the bears show up the following trading session, June 20th, with a gap down, creating a resistance area, a little window out there of Price. And so we know that the bears are really hanging out inside this range right here. That's the area that they're protecting. That's why I say this is a tail between the bulls and the bears out here. Right now you've got Price pushing back into that hammer candle low, which is 22.64 out here. Also some resistance with this other window, this gap down on July 18th. If somebody's trying to play Intel to the long side, I would look for something else because this just has too much resistance and not enough support, quite frankly. I mean, the bears look like they are really getting control of a foothold with inside Intel. Now, that's a little bit different story than actually in the semiconductor index chart itself. If we take a look at the SOX index out here, we're going to see more of a bullish-looking stock chart than we are a bearish-looking stock chart. Inside the actual SOX index, if you're following that with us here on Tiger TV, you're going to see most recently, you're going to see a little window, a little gap up. That was the trading session between July 31st. That high was 480.70, and the low of the very next session, which was 481.76. So that's, even though it's small, it's very important to see that little window out there. So you got a window. This is actually a little hammer candle right here, the hammer candle from July 26th. We did see it close below that hammer candle, but it's been fought off. It had this little bull sash candle here. The bears, they're defending this area right here, which is the 493.20, little bearish engulfing right here. But the SOX itself looks a little bit stronger than Intel does. And Intel, I believe, is the number one weighting with inside the semiconductor index out here. If you get a close above 493.20 on the SOX, that would be very, very bullish in the marketplace. So that's the tail between those two charts out there. Let me see here. I just lost a screen. Okay, now we're back. Oh, it's only 10:37. Okay, I thought I might be in my last segment out here. So that's on those. Now, I wanted to go back over to the currency marketplace, and let's go take a look at. Sorry about the bouncing and around here, but we're gonna do it anyways. We're gonna take a look at the Queen, at the Euro U.S. dollar currency pair, and that had formed a 0.786 sell signal. A little Gartley. Was it a Gartley? Let's see if I can draw that pattern in here. Or was it just really probably more just a straight 0.786 retracement? Yeah, that's kind of a quirky looking pattern. You can't see the 1.618 expansion of a set of swing points, but nonetheless here you had the euro make a 0.786 retracement. We had the bears show up right here on this trading session, July 29th, but because that wide ranging bar here on July 25th, this one said, be very cautious if you're going to go jump to the short side on that. Little doji candle the next day, a little bit higher price. Now, we did see the bears really step up to the bar on August the 1st, but look, they were not able to take out this wide-ranging bar here. And then on Friday's session, they basically thwarted. I'm using that word twice now today. Don't know where it's come from. Just out of thin air. You got to love it. And they basically took back that bearish engulfing candle. That bearish engulfing candle, in my eyes, doesn't really exist any longer because on Friday, the bulls were able to take that back. So I'm seeing inside the euro U.S. dollar currency pair, you can see the moving averages, that little rainbow convergence that we had pointed out right about here, and that was from a lagging indicator standpoint. That was saying that price wanted to move higher out here. Right now, it looks like the euro really wants to make a run for 1.3415, wants to go all the way back out to that swing point from June 19th out there. What I can say is this. Each time the bears try to take control of the euro, the bulls are stepping in. Maybe it's Super Mario Draghi, or maybe it's somebody else out there, but I can tell you that for sure, with certainty, that the bulls are stepping in each time and to go ahead and support the euro out there. If I take a look at an intraday chart, which would be just a 30-minute chart out here, on the euro US dollar. Let's go see what it is doing here. So now the euro has been pushed lower, as we saw. Take a look at the daily chart, but it's moving in towards that oversold territory. Look at that wide-ranging bar out here from 9 o'clock in the morning. That was Jobs Friday out there. So I am not seeing much more movement to the downside here inside the euro, at least as we speak right now, because that oversold condition is going to need to begin to work its way off. It can do it by just simply moving sideways, or it could go ahead and do it by retracing and moving a bit higher out here. But each time, again, the bears try to take control of the euro, they fail. Let's take a look at the Great British Pound out here versus the U.S. dollar index. This is the intraday chart that we're taking a look at. That, to me, looks bullish. You can see how at the 5:30 a.m. session, it got into where extremely overbought. So that meant that had to work its way off. And it's done that with really kind of a slight pullback. No big deal out here on the pullback. Let's go see what the daily chart for the Great British Pound is showing us out here. Great British Pound, that had a nice wide-ranging bar, nice bullish engulfing candle on August the 2nd. On Friday, that wide-ranging bar went from, went through the 0.382 and right up to the 0.618 level, 1.5306, all in one session. Of course, that said 0.786 was on the horizon. Well, that took place overnight as it got up to the 1.536 level. But this looks to me like the Great British Pound, it too wants to go tag the high of 1.5433 out here. If we go take a look at the King, let's go see what the U.S. dollar index is doing out here. Pulling back a bit. Let me go ahead and put this. Let's actually try to clear off some of the stuff here on the chart, make it a little bit easier to view. Get rid of that, delete this for the moment here. So now we got a little bit better view of the King Dollar. If you are listening on the radio, remember you can always catch the archive of this show on Channel 10 at Tiger TV. I'm sorry, I'm actually multitasking. Some of you may be able to figure that out in the background. So, all right, back to this. Now, we're taking a look at the that nice bull sash candle right here on August the 1st. That was on Thursday. But again, just like in the euro, where the bearish engulfing candle was taken back, so too, for the most part, was the U.S. dollar index on Friday. No real movement out here today, neither overbought nor oversold. But what I can say in taking a look at this stock chart here, the real support on the U.S. dollar index is back down here at June 19th, out at the $80 mark. Here's where you saw two dojis in the window, at least the window if you're watching us on Tiger TV. Big, nice, bullish engulfing candle, wide-ranging bar session right here on June 19th, and some follow-through out here. Unlike here, this little bull sash candle and follow-through, no follow-through always makes those candles very suspect, more like one-hit wonders or one-day wonders out there. And that is on the King. Yeah, hey, how about that? That little that was pretty smooth, wasn't it? That voice break up there. Let's take a look here at the some of the sectors within inside the S&P 500. Let's start off by taking a look at the financial sector, the XLF. The XLF is going after its swing point high of 2093. Its most recent swing point high. It's 1.272 butterfly sell pattern. Volume up there is 30 million shares. As prices come up in there, it's coming up with volume. 34 million shares on August 1st. 31 million shares on Friday. So far today, it's done 5.6 million shares out there. The test, I should say, of the XLF is going to be at 2093. It's at 2083 right now. A close above that level would go ahead and set up a 1.618 expansion of swing points. That would be 2144. So the XLF here wanting to at least test the swing point high from July 23rd. If we go take a look at the energy sector, the XLE, it's actually doing pretty well considering the poor stock chart for ExxonMobil. We'll go switch over and take a look at it. Now, this of all the charts has got the largest number of reversal patterns on it. It's got two 1.618 butterflies. It's got a nice long-term 1 to 1 A to B equals CD on the way up out here. And right now it is traveling at 83.11. Has not been able to be pushed down. It's really still traveling inside the May 22nd swing point. That made then the other bearish pattern was the failure of the top of that 83.95 with 19 million shares. You got up to 83.96 with only 6 million shares on July 23rd. We saw that pullback because that was a rejection of price and volume, and then we saw a little bit of a move higher with 10 million shares coming into 19 million shares, so not enough, but that swing point was not tested. What was giving us a signal that this wanted to actually at least go back and test that area was the fact that that 6 million failure trading session, July 23rd, its most recent swing point, only had 6 million shares versus the trading session here on August 1st, which had 10.6 million shares. So it's coming up into that swing point with some volume, all despite what's going on inside ExxonMobil. What I mean by that is ExxonMobil was in a 7-point sideways consolidated trading range, and ExxonMobil came back into that trading range. That says ExxonMobil actually wants to make its way down to $85. ExxonMobil gapped down. Did it with good volume, 23 million shares. That gap down back into the trading range occurred on the 1st of August, and it was coming up a resistance, support area. That support area held for 2 trading sessions, did not hold today. It's going to be erased from my screen here so long as ExxonMobil does not close above $91.61. It's at $91.17 right now. If we take a look at retracements as far as what ExxonMobil has done so far from its most recent swing point low to the high, that would be from June 24th all the way up to the high on July 23rd. 90.87 will be your 0.618 retracement level. It's been down today so far to a low of 91.03. So the XLE, ExxonMobil is, 30% or so of the energy sector, and so imagine if ExxonMobil was not pulling back like this. Nonetheless, it is, and it still is a part of that weighting structure, but well, that's all I have to really say about ExxonMobil. As long as I'm inside here, let's see what inside here, meaning the core charts that I've got inside this little tab. Let's go take a look at IBM. I'm probably guilty of beating up on IBM a little bit here lately, but on Friday's session, IBM, the bulls showed up to help support IBM. Look at that candle formation out there. That was a hammer candle that was formed inside IBM on August the 2nd. Volume there, only 3.8 million shares. That 3.8 million shares not really testing a whole lot other than this downdraft session here from July 19th, which had 7 million shares. But nonetheless, you do have a hammer candle. So if you're wondering, are there any bulls around inside IBM? No bull. Right there, defending the price level of 193.22 is where the bulls are hanging out inside IBM. If they cannot defend that territory, IBM will head back to the swing point low of June 28th. That's at 188.44, but more likely, and this would be, I've been waiting, would like to see IBM get all the way back down to here, about 182 and change or so, and see if that area can hold, because that's really set up one heck of a nice sideways trading range out here. And had a nice sign of strength out there, which took place, taking you back to January 20th, 2012. Look how long that trading range has been going on. And I would love to be able to catch IBM at the bottom of that trading range. That means that you can't see a close below, or you don't want to see a close below 181.85 out there. But if IBM could get back down there, that might set up your next nice buy inside IBM, because that is a nice trading range, 185, 182 to about 212. So it's a nice 20-point trading range inside of IBM. Let's go see here if we've got anything moving and grooving in the market. Oh, I know we always do. So let's go see what we've got. You got Priceline, that's up $20 here. Oh man, that is a stock that is absolutely on fire. You've got Zillow up a nice 8%. That was out with earnings. Trulia, those real estate stocks are on the rise. Noodles and Company, noodles and oodles of noodles. That's that IPO. I think some core guys from Chipotle inside of that one. Fossil Group to the downside. I'm just trying to get the cherry pick these. Let's go take a look. I would do Zillow. Let's see if I can do Zillow. I've got to fake my system out this way. Give me a minute here because of something going on inside the system. So give me a second. Z is a ticker symbol there. So we're doing Z, just on behalf of Z inside the Tiger's Den. So we got Z's all over the place. Why don't I see Z on my chart out here? Sacre bleu. Well, let's go see if I can do this here. You know what? When we get back, I'll have this all set up. We're going to take a look at Zillow, ticker symbol Z, when we get back. Right now, we've got the Dow's off 29 points. S&P just slightly red, down 92 cents. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 30 right now. S&P off 1 point, and we're going to check in on that Zillow stock chart out here. I've got the weekly chart on my screen. It's right now priced out at 92.55. Zillow on its way up to 100.21, maybe even the 114 level. At 100.45, it would be completing a 1 to 1.272. A to B equals CD pattern. That's on the weekly chart. Been a rocket ship for sure, but that may not be where it stops. It may more likely stop right around the 115 type range out there. Again, it is traveling at 92.70. Nearly everyone. This equity is now in the profit. Is in a profit position. So let me recap where it is that I believe we are inside the marketplace. Number one, if we go back and we take a look at the indexes themselves, take a look at the daily index, we'll take a look at the S&P 500. They're all doing the same thing, all except for the Russell, which has already been a rocket ship. But if we take a look, well, here's the Dow. The Dow itself wants to make its way up to 15,779-ish. That's the range. That's the 1.272 expansion. The S&P 500, and that's so long as it stays above that May 22nd swing point high in the upper portion of the range. The S&P 500, this wants to get up into the 1720-ish range out here, and all of that will be able to occur. So long as the VIX index stays, about where it is at. The problem with the and the VIX is, it's really not doing anything out here. The VIX only is going to become a major problem if it gets above the 50-period moving average, and that's got a long ways to go. That number is at 1432. It's at 1210 right now. If we take a look here at the New York Stock Exchange, that's telling us a little bit different story out here. So this is one we got to pay attention to. Key on the New York Stock Exchange is going to be as it tests the May 22nd high. Can it close above 96.95.46? If, in fact, it does that, it's above its May 22nd high. And I suppose when it does that, maybe we'll actually see the McClellan Oscillator Summation Index tick up. Right now, believe it or not, it is still the bears that have control of the marketplace, even though it doesn't look like it. Under the covers right now, which is what you want to be making sure that you're paying attention to under the covers, being the New York Stock Exchange, it still is the bears in control. You would need today just a total of 393 net advancing issues for the Bears to have fumbled the ball and to give it back to the Bulls out there. If it turned out to be 394, that's not a lot of conviction behind it. But 500, 600, something like that, that would be a whole different story out there. But it does look like the NYSE wants to go tag that area. Inside the futures market, well, the futures market is telling us that it too wants higher price because the ES Mini, the 120-minute chart, has been traveling in a nice 23-point sideways consolidation range. It's been doing that really since the lows, we'll call it, back in the middle of July out there. This area was tested. Back on Friday, we saw a couple different tests as price tried to get back towards that consolidation range, just like ExxonMobil did. In this case here, the ES Mini was unable to do that. That sets up a target range of about 17, 18. You got a 4-point difference basically between the futures and the S&P 500. The S&P 500 is looking for 1722, so we've got patterns that are confirming each other that are telling us that that is the next price target of where prices want to actually move up to. If I go in and I take a look at the currency pair, something to pay attention to in the currency pairs out there, that would be the euro-yen currency pair. Let me see if I can pull this up on the screen here this way. I'm in the wrong tab. That doesn't work. You know what I will do? I'll say that, I've got some charts out here that say be careful, because you got to take a look at both sides of the trade always. You need to make sure you're looking at both the bullish and the bearish side. And on the bearish side, what we've got is the Dow versus the Dow Jones Utilities. That has got a major divergent pattern in here. If you're looking at my chart, the top of the chart is actually the Dow Jones Utilities, and the bottom of the chart is the Dow itself. And each time that these divergences have shown up, we've seen some market corrections. They're not used as a timing tool. They are used to tell you to be careful. Stay tuned for Basil Chapman, folks. Have a great Monday. I look forward to seeing you. Actually, I look forward to seeing you tonight, filling in for Tom for the 4 to 6 o'clock session. Take care, folks.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.